Good morning, traders. It is Tuesday, September 13th. We are about an hour and a half before the open. Let's get started right away and take a look at the last pick. On Friday, about 90 minutes into trading, which is right about here, I highlighted Airbnb. You can see how the stock continued to grind higher Friday. Really nice move up yesterday. Let's take a look at that daily chart, get our bearings, see where we're at. Here's what I like about the stock. We had this downward sloping trend line here, breach to the upside. We had this long candle here that was able to close above the 100-day moving average and follow through. I still believe we're going to see Airbnb get through this horizontal resistance level. Stock looks really good. You can see it's got plenty of upside before it gets to that 200-day moving average. Let's get our market bearings. Want to spend quite a bit of time on market analysis because that is what sets the tone for all of our trades. First thing I want to do so that I can remove this volume, you don't have to take a big look at volume. It's pretty easy at a glance. You can see what the volume's been doing when we get these rallies. This was a very nice bounce that we had this summer. And you can see that the volume started to taper off right in here. Well, that is a warning sign. And here it's about average as the market starts to get to this peak right in here. That also happened to coincide with the 200-day moving average. Time to be careful. You can see on the drop here, heavier volume. That means that traders are much more aggressive. You can see here, this last little bounce, we've got lighter volume. So I like the bounce. I think it's nice. I think it's good. We've broken through some technical resistance areas. Let's put up those major moving averages. Let's take off that volume. And let's get rid of this as well. And now we'll put up the major moving averages and we'll start there. So the 200-day moving average, you can see how that came into play at the top of the last rally. We tried it once, rejected it, and never got back there. This long red candle was after the FOMC statement where the Fed said we're going to continue to keep the pressure on. We are hiking rates until inflation is under control. And we realize that that in all likelihood is going to lead to a reduction in economic activity. We're fine with it. And that message has been pretty consistent. The good news for the Fed is that the economy has actually been pretty robust. The numbers have been solid. We haven't seen any kind of deterioration in the last few months since the rate hikes started. So the market is taking comfort in that. So we come down and we blow through the 100-day moving average. I mean, obliterate it. And when that happens, you're usually going to get some follow through selling. We obliterate the 50-day moving average. Okay, here we go. Now we are going to really test support here, and we can expect a little bit of a bounce in here, but the overall move should be lower. I mean, that's what the technicals would be telling us at this stage. Now we get this pretty hefty bounce in here, which ideally what you'd want to see as a bear is you'd want to see this rally here, which is fairly sizable given the 1-year chart. And now we get a pretty big pullback, which erases about half of these gains. Okay, you would want to see a nice little bounce in here that stalls very quickly right around this resistance level. You don't want to be flying through it, and then you want to roll over and start heading down. Why? Because that tells you that sellers are defending this point right here and that they are anxious to unload more stocks because they don't think that the market is going to get much higher than that. So they don't want to miss an opportunity here to sell, sell, sell. This also could be a head fake oftentimes because institutions will push the index through and then they'll slam the door when these buyers come in, and then you'll get your next wave of selling. But this looks pretty good, and the tell-in here was that we had this long green candle and there is an upward sloping trend line that was defended. So let's draw that trend line in, and then you'll be able to see, yes, so this trend line was significant. We came down, we tried it, tried it, we tried it, And this long green candle, we actually tried to get through that support. But once that support was established, grind, 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 grind. This was Tuesday after Labor Day. So yeah, post-holiday, am I that impressed with it? Not really. I still like this momentum, so I'm going to favor this momentum versus anything else. But then the next day, we come in and we test half of this long green candle, and it's preserved. Then we easily fill the gap and we take out the prior day's high. That has my attention. Okay, this looks like pretty decent formation, and I'm expecting that we're going to see some follow through. And of course, we got a gap up the next day, obliterating, not just poking through inch, 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 obliterating that moving average, which is important, and closing way above it. Well, now we've also got this minor downward sloping trend line right here that's been breached to the upside. So that's another technical resistance level. Gap, gap. We're closing near the high. Long green candles. We're gapping up today. I don't trust these moves either. Let me tell you, when you get like mini gap, mini gap, mini gap up, that's coming on fairly light volume. And I would prefer to see these nice long green candles where you test the low of the day, you probe for support, grind, 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 grind. The next day we go through the same process. Those are nice, solid types of candles, like we get in here, this type of price action. But in any event, right now the momentum is pointing higher, so we have to respect that. If you take a look at the longer term trend line, let's zoom out for a second, you can see this is a major resistance line that's coming into play. Might we test it on this bounce? Sure, we may be able to test that. We'll draw that in just so that you can see where that comes into play. Pretty much coincides with that 200-day moving average. So that is a very important level for us to watch. If you read the headlines, and I encourage you not to read the headlines because everything is so confusing. You have heard me talk about China, there could be credit concerns, they're in lockdown, COVID, having energy problems, supply disruptions, Ukraine, war, Fed tightening, ECB, 75 basis point rate hike, another 75 basis points on top of that. If you read all the headlines, you can't help but be bearish. So I encourage you, don't read the headlines. Look at what the technicals are telling you, because there's a different story being painted there, and the technicals never lie because the technicals measure what is actually happening, not what you're hearing from the news and the media. This is what's actually happening. This is what institutions are actually doing. And there's something that you don't hear a lot about that is a huge underlying force for the market. And that is that we've got trillions and trillions and trillions of dollars sloshing around looking for a home. Well, they can't go into bonds. Bonds are nowhere near keeping pace with inflation. So that is a losing proposition in a big way. Well, where does that money go? Right now, it's been in cash, it's been on the sidelines. But every time that you get a market sell off like this, there is going to be some buying. Markets do not go straight up, they do not go straight down. So that money is going to be put to work, and you're going to have some buyers in there nibbling away. The other thing that you don't hear about is corporate buybacks. What are corporations doing with their cash? They're buying back shares as fast as they can because they see that as an attractive investment themselves. They know what their company's future is. They know how much money they're making. They are aggressively buying back stock at these levels. If you look at what's happened over the last 10 years, and this is super significant, they have bought back 50%, half of their outstanding shares. So you have less shares, you got trillions of dollars looking for a home, price goes up. So that's a force that's underlying that you never hear about. And pending any major global credit crisis, you will always have those buyers. Could there be a credit crisis? Sure, there could. I'm seeing some warning signs, but that's not something that you want to predict. You'll be able to see those signs well in advance. You start hearing about issues on the fringe, like depositors in China going to rural banks and not being able to pull their money out. Yeah, that's one of them. You start watching sovereign interest rates go higher. Yeah, that's a problem. So, sure, there are some tells out there right now that we could see a credit crisis. Will higher interest rates globally get that ball rolling? Perhaps. But for right now, we need to know that there are actually two balancing forces right now. Lots and lots and lots of cash with no place to go and fewer shares to buy, offset by all of the negative headlines that you hear. So don't ever dial in and say, gosh, the news is so negative that the market can't go up. I have to be bearish. Just follow the technicals. Forget the headlines. Forget everything I just told you about cash sloshing around and corporate buybacks. Forget all the Ukraine war issues. Just focus on the technicals. It's going to paint a very clear picture of what's going on. So I'm going to show you an indicator that I use that also helps me. And the one thing I also want to mention is that, you get this sell off like this, and everybody starts getting pretty bearish, rightfully so, because this is a nice, fast move. But what you have to keep in mind is that the market is going to find support at certain points, and you don't just automatically go from I'm bearish, bearish, bearish to buy, 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 buy. You can't do that. You need to have concrete signs that there is a transition taking place. And these transitionary periods right in here are very, very dangerous to traders. So your goal is not to get short here. Why? Because this could be a pause. Zoom, see you later. How do you like your puts now? And you take off and you keep going. Buying in here could be a little head fake and then the bottom drops out. Well, you want to make sure that you have technical confirmation. And I was short in here. This was my bias. And you know that from my CRWD trade. And you know from my commentary why I was bearish here. Well, does that mean that I instantly go from bearish to bullish? No. I had to wait for a bit. And you can see that green candle was significant. This one was the tell for me. And now I know that there's some support forming. Yeah, there's an upward sloping trend line here. Yes, you've got some overlapping candles here. So on these drops, we're always looking for compression. We're looking for overlap. We're looking for signs that buyers are there. That tells us that if we are short here, we need to start paring back our positions if we are short-term traders. If you are a long-term swing trader with a month or two or three trade duration, you don't worry as much about these points right in here. So yes, you could reduce your risk, you could adjust your risk, you could hedge a little bit to the upside, but this is not going to scare you because you're looking for this move right here to stall out, and then you get your next big leg down, and then you're going to be fine. In fact, as a short, you probably would be adding on any kind of stall up in here. But as a short-term trader, you have to tread very, very cautiously. So let's remove all this stuff. I'm going to show you another indicator that helps me gauge when the market might be finding some support. So I'm going to right click, I'm going to remove all these studies. This, by the way, is Option Stalker. This is what I use for all my analysis. And I'm going to overlay a proprietary indicator called OneOP. And there it is. And you can see it on a daily basis. Yes, it works on a daily basis. Since most of my videos are relatively short-term in nature, we're trying to identify trades that fall within about a 2-week or less time frame. Recently, I've been mainly day trading because of this volatility. I feel like I can catch every move without taking overnight risk. Why would I do anything but day trade? Having some overnight swing trades? Yep, absolutely. Can justify that as well. As I strip all of this away, you can see that on a longer term basis, we have a big wedge formation here that is forming. That tells me that we're going to get a breakout this fall, one way or the other. But until we have that, I'm not going to guess which way it is. I'm going to be looking for these inflection points and these transitionary points, and I'm going to be seeing what kind of follow through we get. So I'm going to go into a 1 hour chart, and we're going to just look at this 1OP indicator. We're going to see how it works. When you have a cross like this from a deep trough, this is a bullish cross right here. This tells you that we should be expecting higher price action. Hey, that's exactly what happened. This indicator also tends to be predictive. It is early, so we need to have technical confirmation. So you get this nice rally here. Now you got a bearish cross. It's telling you up here, hey, you know what? You should be watching for some selling pressure in here. And if you have a technical breakdown, aha, right there, then you should be favoring the short side. So here we go. We get this little reprieve in here. We're not able to cover that gap. Got that bearish cross. And now you can see how the selling pressure starts to accelerate. Okay, right in here, we should be looking for some bullish price action. So this is what we call a divergence. There are divergences, and especially when the trend has been strong, we can expect them. Well, we've had a couple of gaps down in here. So yes, we get this nice cross here, which should have produced upward movement. When it doesn't, it tells us that we should be looking for continuation on the downside. So this is a bearish divergence. Well, in this case, market continued to drift lower. Here we go. There's our bearish cross. This should produce a pretty good move lower. That's typically how it works. It didn't. This is a benign cycle right in here. And these cycles really, really help us. You'll see how. So there's a benign cycle in here. Well, there's news in that, and that is suggesting there may be a little bit of support right now. So we've got to be a little bit more careful with our shorts. Here we go. There's a bullish cross. Well, from here to here, you can see how that bullish cross did not produce anything either. So we've got benign, benign. Okay, well, that means that the next bearish cross should produce, and it does. And it produces in a big way. Now, here's the tell, is that this is an hourly chart. This bullish cross, it produced nicely. This bearish cross, and you can see the timing. I mean, when everything starts to sync up after you get a couple of benign cycles, when it starts to sync up, boy, does it sync up. So really nice bullish cross. Really nice bearish cross. Really nice bullish cross. Okay, everything is good right in here. We're starting to see now this indicator is working on both sides, bullish and bearish. That tells me that we're getting excellent price movement, and you can see that, and that buyers and sellers are paired off. Well, if I've had a huge decline in the market and now this indicator is starting to give me good signals on both sides, that's a sign that support is forming. No longer are we one-sided where all the bearish cycles are producing and the bullish cycles are not. Now we're getting nice two-sided follow through. Uh-oh, here we go. Look at this. We should expect a sell-off right here. That is a bullish divergence. That is very bullish, and it is usually a sign that this cross here, this bullish cross, is going to produce. So yes, I am bullish right now. So with the 1 hour basis, we're already getting into the mindset that, hey, you know what? This is pretty nice. We got a bullish divergence. We got a bullish cross. We should continue higher. By the way, before the open today, the S&P futures are up, I think, about 25 points or so. So yes, we are going to be opening higher today. I'm going to zero in on the 30-minute chart here. This will give us same indicator, a little bit shorter time frame. It's going to be a little bit more granular and a little bit more timely for day traders and for very short-term swing traders. So there's your bearish cross right there. You can see big decline. By the time this cycle finally runs, we're down in here. Now you get your bullish cross. We should be looking for some bearish price action in here. Lo and behold, we get it. So right now, yes, produced. Here's our bullish cross right in here. Okay, yeah, that looked good. Now right in here, because this is a 30-minute time frame, you're already seeing this divergence earlier than you would on a 1 hour basis. So this 30-minute chart, and you've got this big bearish cycle right in here, you would expect the market to sell off, right? Because we're in a period where bullish is working, bearish is working, bullish is working, bearish is not working. Okay, now we know that there's support forming in the market, and then we get a really nice bullish cross in here, so I'm expecting it to continue. It's an interesting way to trade. This is an indicator that took me a very long time and a boatload of money to develop. If you start to understand the concept of cycles and the market going through cycles, and when this indicator produces solid results, that's the side that you want to favor. When it produces results both ways that work, that tells you that the market has a lot of movement, buyers and sellers are paired off, there's going to be a move that's going to be happening. And when you start seeing a divergence, that tells you which direction, who the winner is going to be. And right now, the winner is the bulls. We've got a nice bullish cross M30, got a nice bullish cross H1. Now let's find some bullish stocks. We also have the regular technicals that we can use on a daily basis also. So those are important for us to have. The 200-day moving average we know is way up here. We just blew through the 100-day moving average. We got this downward sloping trend line, a minor one that we also got through. And resistance is probably here at the 420 level. So what do I want to do? Well, I want to make sure that I put a candle there because there's a small gap that can be filled there. And we're currently at the halfway point of that long red candle right there, and we've poked through it. I also view that as significant. When you get these super, super long candles, that halfway point is important. That open, where I have my line, very, very important. We get through that, we could challenge the 200-day moving average. We challenge the 200-day moving average. Uh-oh, that's where that long-term downward sloping trend line came into play. So we'll watch. We'll see. I don't need to predict what's going to happen right now. Everything is telling me to be long. At such time that I start to see my indicator, this 1OP indicator, not produce on bullish cycles, then I have to be super cautious. Until then, I'm going to continue to favor the long side. So I hope this really helps you understand the whole premise of cycles as well, because the market doesn't go straight up and straight down. It moves in these cycles that span over a variety of different time frames. So if you look at a longer time frame and a shorter time frame, you'll be able to get a bigger picture and a shorter term time frame. Let's try to look at stocks and see stocks that present greater opportunity and less opportunity. Right here we have, excuse me, we have Apple, nice downward sloping trend line, clears all those major moving averages. It's above its 200-day moving average. I really like Apple. You can see, yes, I can use 1OP. We've got a big cross that's pending right in here. So this could be a nice bullish cross, but I like it. This is nice. You can see, had a lot of steam. That's a big move. Small pullback, and here we are with any market strength right back on it. I like Apple. Could be my pick of the day. ZS, I think I showed you this a few days ago. Love that downward sloping trend line. Earnings before the open. That green candle's when I did my video. Beautiful follow through. Too choppy. Look at all that resistance. Why the heck would you want to look at a stock like this? I see traders all the time asking me, what about this and what about this? And, Tesla is one of the main names. And Tesla could be in this kind of pattern and they're looking at it. No, this is just junk. This is chop. Look at all these resistance points in here. If I look at Apple, it has already cleared all of that trouble. Let's go back to it. I got to show you that. Okay, so these are all resistance levels. That was a resistance level. Apple has plenty of room to run. First resistance there. Look at that room. It's got a ton of room to run. Then it can get to the high. That's what you want. I don't want anything in the way. I also want nice tight patterns. I don't want chop, 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 chop all over the place. I also don't want to buy something that's been buried and it's just now getting a bounce because we have a strong market and it's just starting to lift off the bottom just a little bit. No interest to me until it has some upward momentum, especially if you're trading options. My God, you have got to have a breakout and you have to have follow through. This is nice. I like Etsy. Downward sloping trend line in here, stacking some candles above the major moving average. Really nice support right here. You could see during the last market drop, remember that big market drop that I talked about right here? Well, Etsy didn't have anything like that. It found support. Yeah, I like Etsy. I think that could be a nice one. Netflix, dead wood, it's not doing a whole lot. Yeah, it looks okay. Maybe selling out of the money bullish put spread on it. This is pretty nice, but a little bit choppy. This is Crocs through that horizontal resistance, poking through the 200-day. If it can continue to get through that, it will be good. This is pretty nice, but you can see Goldman Sachs, pretty big choppy wavy moves in here. Downward sloping trend line above the 200-day. Yes, it could get going, but not my favorite. Gilead, beautiful breakout. Another chunky, choppy, all over the place stock. Good breakout here. Big gap yesterday. Could it have follow through? Yeah, good volume. Go to the next one. Yeah, I like this. This is a little bit of a choppy stock too. You can see really nice run here. Big drop. Now you've got this nice pole here, downward sloping trend line, breach to the upside. Yeah, DVN looks pretty dang good. This could be my pick of the day. I like it. Think it could continue to move higher, at least up to that $75 level. And then once it clears that, it would have a path to $80 or so, that high right there. Yeah, that looks good. I like it. This could be my pick of the day. NIO, downward sloping trend line, breach to the upside. That looks good. It's got that 200-day in the way. No, thank you. CVX, another energy stock. No, nothing there. Too much resistance in here. I'm only going to look at a couple more. I think I've got my pick of the day. COP, this is nice. Downward sloping trend line, breach to the upside through horizontal resistance. Folks, I think Apple's going to be my pick of the day. If I had to pick a stock that I've looked at right now, I used my green royal flush search. This is excellent for swing traders because it has a buy signal. This stock has a buy signal across every timeline from 5-minute, 15-minute, 30-minute, 1 hour, 2 hour, daily. All of those signals are in alignment. So I'm going to go with Apple. I really like the price action here. I think it's got plenty of room to go. Love that breakout there. Love the fact that it's above the 200-day moving average. So my thesis for this trade is, first of all, I like the market. All of my indicators are telling me that the market is going to move higher right now. Would I chase a 25-point market rally on the open today? No, 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 I would not. Well, why not? You just said you were bullish. Light volume gap up. Light volume gap up. Here we go, another gap up here. Now we're going to get another gap up on light volume. No, I'm not interested in chasing anything on the open. Let's take a look at the 5-minute chart of the S&P 500. Yesterday, there's your gap up. Okay, hey, this is actually pretty nice. We stacked some green candles here. All right, I'm going to chase this baby. Oh, yeah, this is the real deal. Haha, look at that move. Uh-oh. Oh, that's okay. I'm still bullish, holding the gap. Looks good. Yeah, okay, here we go. Yeah. This is it. This is where we take out the high. And another retest of that open. We are going to see moves like this. That means you need to be patient. Got a big gap up today. We're going to come back and fill in some of these gaps. You know we are. So just be patient. Take a deep breath. This is not the last train out of town. There are many buyers and sellers, and all you got to do is take a look at the daily chart, for crying out loud. Do you think that this is the last chance for you to buy? Absolutely not. And that's how asset managers are thinking right now too. Yeah, this is a nice little bounce. Maybe I'll nibble in here a little bit, but this is not the last time that I'll have a chance to buy this year. We've got an FOMC meeting coming up. We got a lot of news that's going to keep investors on edge. So that tells you that you do not have to chase. There are plenty of opportunities to get on any side of the market that you want. So with regards to Apple, what you want to see is you want to see that open and you want to see it preserve the gains. So here is a classic tell-in. Let's get all this garbage off of here so that we can see it clearly. Yesterday, as I told you, market gaps up, Apple gaps up. Okay, great. So here we go. Oh, market has a little dip. Apple holds its own. Very interesting. Oh, look at this. Market lifts off. Oh, here goes the market has that next leg down. Apple is still in an uptrend. And all I got to do is put up one OSI, and you're going to see that reflected in one OSI because it is going to stay above zero and it measures relative strength. Another way to view this same data is let's just do an overlay of the S&P 500. And there's the move I was telling you about. Ka-chunk goes the S&P 500. Apple, if you bought that, you're okay. You're hanging in there. You're going, all right. I don't have a problem with that. All right, get a nice little market rally. It joins that bounce right here with gusto. Takes out the high of the day. Boom, just like that. Uh-oh, here comes that next big leg down in the S&P 500. Tests the opening. What does Apple do? Yeah, it moves down a little bit. As soon as the market finds a little bit of support, there goes Apple. This is why we trade relative strength. If you were in Apple yesterday, yes, you could have watched for these market moves. You could have been prudent. You could have said, all right, I'm going to get out. But if the stock continues to hold its relative strength, I'm going to get back in and I'm going to wait for that market bounce. Thank you very much. Uh-oh, here comes another big leg down. Yeah, I can get out here. Okay, higher low. This is good. Yeah, I'll get back in here and then you're on for the ride. That is how you day trade stocks. So do not rush. You will have an opportunity to get long Apple. Be patient and watch for that relative strength, and you'll be in good shape. Thanks so much for watching, everyone. I hope you're able to benefit from all the lessons today. When you have a market that's declining like this, there are going to be areas where you can take profits and where you should take profits when you start coming into a major trend line like this and horizontal support at 390, you don't instantly turn bullish because you bounced once or twice. You've got to have technical confirmation. And once you have that technical confirmation, if you want to trade the short side, you want to be on the short side, that doesn't mean go out and start buying. It means take some risk off, take some of your shorts off. If you're a longer term short, then you're going to wait for this to release, and then you're going to add short positions back at a very favorable price, looking for that next leg down when you start hitting resistance points. So you can maintain your bearishness and simply wait for this to run its course and then to reload so that you're not head faked in and out of positions. If you're a super short term trader, then obviously your goal is to try and catch all of these moves in here, but you have to wait for confirmation. You don't start shorting until you see, okay, this is a pretty nice little drop right in here, break that upward sloping trend line. Aha, big gap down. Yeah, I can add to positions. I see that, take out that support. Yes, that then I can get even more aggressive with my shorts. Good luck with your trading. I'll try and do more videos each week. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.